So we know about traditional investments, right? What is this alternative investment all about? Apart from your traditional investments like stock and bonds, you have certain alternative investments in the form of private equity, private debt. That means you can pool the funds and provide finances to some companies, right? Here you can pool funds and you can invest in some companies, take some stakes in companies, or invest in some projects. You can invest in you can invest in real estate. You can buy commercial properties that comes under real estate, land, building, anything. And you can invest in commodities, REITs, real estate investment trusts. Lot of other options are also available apart from the traditional investments, right? These are all called as alternative investments. Fine. See, what is the perception? The perceived see the point is many people won't go for all this because it requires huge amount of money to go into all this, right? But it is easy for them to go for all this stocks and bonds because they can buy any number of any number of securities which can suit their budget what they are ready to pay. But here they have to commit a big amount, right? Perceived benefits of including alternative investments in portfolios are risk reduction from diversification. Of course, if you're diversifying your investment, you're reducing your risks, right? Yeah, we understand that the alternative investments are illiquid. Okay. So due to low correlations of alternative investments with traditional investments, of course, the land prices are increasing and the stock prices are also increasing. How come we can correlate them? We cannot find out the causation in that, right? In the sense that the correlation will not be that strong between them. The strength of the relationship will not be strong between them, maybe. And possible high returns from holding illiquid securities. Of course, there are certain investments what you do and they are illiquid, but they can give higher returns to you. If you buy plots or apart or like piece of land in outskirts, if you wait for longer period of time, it can give you higher returns, but it is illiquid. And from markets for some alternative investments, possibly less efficient than those for traditional investments. Yes, see, the markets are very much regulated in case of stocks, right? But in case of alternative investments, it is less regulated. Compared with traditional investments, alternative investments typically exhibit the following features. More specialized knowledge required of investment managers. That's very importantly. That's definitely understood fact. Yeah, in fact forgot to mention you about hedge funds as well. Yeah, there was a news that they're going to come in India, but in April 2024, I had a news. Let's check. Relatively correlations with returns of traditional investments, less liquidity of the assets held. We know that it will take longer time for you to convert that into cash. Longer time here horizons for investors. They have to wait for a long time. Large size of investment commitments that I already have mentioned that you have to put a lot of money. As a result of these unique features, alternative investments exhibit the following characteristics. Investment structures that facilitate direct investment by managers. Of course, those are made in the structure are in such a way that they have investment have to be done to some asset management company which is managed by certain managers of that company. Fine. Information asymmetry between fund managers and investors. That means uh, similar information both don't have, which funds typically address by means of incentive based fee structure. That means sometimes they may be selling those funds in which they can get a higher incentive. Difficulty in appraising performance, such as more problematic and less available historical returns and volatile data, unlike stocks, whereby you can get a history. So there are certain kind of alternative investments which are classified into three broad categories of private capital, real estates, and hedge funds. You may be knowing what is real estate very clearly. Let us see what is private capital. So private equity, I've told you, right? They wealthy individuals, they pool funds and they do investments. They take ownerships in companies. Leverage buyouts are nothing but They borrow money to invest. Venture capital, like they invest in companies and they wait for the time they recover their money, what they've invested, they earn profits and they just move out. That is, they invest most probably in startups and in the companies in their earlier life stages in their life cycles. Private debt is nothing but many investors, they pool funds and they give loans here. Okay, instead of becoming investors, they give loans here. Okay, for certain companies which are sick units. Okay. You may be knowing better about real estate, so this I will not be explaining. Is it clear for you?
Yes, sir.
Real estate,
Real estate is fine.
yeah, real estate, you know, right? And
Yes.
infrastructure, railways, roadways. So long-lived assets that provide public services. These include economic infrastructure assets, road, airport. Yeah, there are a lot of investments which happen in this area as well. While often financed and constructed by government entities, infrastructure investments have more recently been undertaken by PPP, private-public partnership, whereby government along with private players they make this. So that is called, that's also a business, that is also an investment, and very good returns they get. And people are now investing in a lot of other assets as well, like collectibles such as art, intangible assets. Okay, like you have some stamp or some coin of old times, and then you can auction it, and then patents, and then cryptocurrencies like bitcoins, doggy coin, whatever. There are many lot of bitcoins there, right? Hedge funds, I've already explained you. In this, the managers, they have lot of they can do lot of stuff in that. They may use leverage, unlike the mutual funds whereby they just invest and they make certain funds which may suit investor's appetite or investor's requirement. But here, the amount what you invest in hedge funds is going to be very high amount. Apart from that, they may use leverage, they may take borrow money in higher amounts, and they may hold assets, buy assets and hold them, or they can take long positions, short positions. As I said, we discussed already during derivatives concept, and use derivatives, options, and futures, invest in illiquid assets, go for commodity buying, anything. They may do anything, but they may try to give you good returns. That is what is something which is important here. Compare direct investment, co-investment, and fund investment methods for alternative investments. Fund investing refers to investing in pool of assets alongside other investors using a fund manager who selects and manages a pool of investments using an agreed upon strategy. So you know this, right? Fund investing is nothing but investing in pool of assets. There are a lot of assets, and many people they come together, invest in those assets. Their money is pooled and put into those pool of assets, right? Not only you, there are many other investors also involved. And there's a fund manager who does that AMC, asset management. Like that's asset management they do the asset management, that's what. And they have whatever strategy they are following to do that, this is agreed between the members and the investors and the manager. In this case, the individual investors do not control the selection of assets for investment or their subsequent management and sale. Manager typically receives a percentage of the investable funds, that is management fee. Of course, he is doing the administration part, managing everything, and also incentive fee if he gives good gains to you, right? If at all he has promised you that he will be giving a good amount of gain, that means he's beating the market, or whatever he has promised is doing more than that, he gets extra incentives. Compared to funds that invest in traditional asset classes, alternative investment funds typically require investors to commit larger amounts of capital for longer periods, provide less information on positions held and returns earned. That is, these are less regulated, right? So less information, and charge higher management fees. Funds term sheet includes describes its investment policy, fee structure, and requirements for investors to participate. What is co-investing? With co-investing, investor contributes to a pool of investment funds, as with fund investing, but also has the right to invest. What are they doing? Investor contributes to a pool of investment funds. That means he's making a contribution. Okay, and also he out of that contribution he can invest as well. Are you understanding? Alongside the fund manager,
Yes.
I'm giving money, and also I'm usually using money for investments. Are you understanding?
But one doubt, he can only use his money for investment, no, sir?
No, the funds are pooled. See, that we have to dig deeper. So that is co-investing. We will see what is this. Okay. An investor contributes to a pool of investment funds as with fund investing. That means he is going to invest also. He is going to give contribution to a pool of investment funds and is going to invest also. So, but also has right to invest directly. Yeah, we will go. Okay. Alongside the fund manager in some of the assets in which manager invests. Compared to fund investing, co-investing can reduce overall fees while benefiting from the manager's expertise. Co-investing also can provide investor with the opportunity to gain the skills and experience to pursue direct investing. For a fund manager, permitting co-investment may increase the availability of investment funds and expand the scope and diversification of fund investment. That means here it is not mentioned whether he can only invest his funds or what. Okay, it's not clearly mentioned in co-investing. Like he can just invest alongside with the manager. That means he can participate in investing and he can use the funds which is available with the company or with the fund. Are you understanding?
Yes.
As they have not specifically mentioned that he can only use his funds, that means he can use the funds alongside with the manager.
The other investors might not trust the. Hello.
The investors.
So let's suppose in a co-investing fund there are 50 investors, but everyone will not agree with co-investing, so there might be conflict. No, so that I do not want.
Understanding. Listen, co-investments allow investors to invest directly alongside private equity. That means he's going to contribute and he's going to invest also. Nothing is restricting him from investing. Hello.
Yes, sir. He will invest, but the other investors might not want him to manage the fund. So that might.
See, I'll give you a small example. Just wait.
Yeah.
I'm just sending you a link. 2 minutes. Now, see what is happening. It is his money only. He is not going to take money from the pool. He is going to invest. The fund is going to invest. He is going to invest. That's what. Hello.
Yes, sir.
The fund is going to invest and he is also going to invest. See, co-investment. See, for co-investment, I'll give you an example of fund investment. See, this is the first method where investors put their money into a fund, such as private equity. For instance, an investor might choose to invest in Blackstone Group, a well-known private equity fund. You know, right? Correct?
Sir, if you are moving the screen, I can't see if you are writing anything.
I'm not writing anything. I'm just discussing.
Okay.
Did you hear what I say about the Blackstone Group right now?
Yes, sir.
You know that Blackstone is a well-known private equity fund. So investor just puts the money into the fund. That's it. Now, what is co-investment? The investor invests in a fund's portfolio company. Investor might co-invest in a promising startup with venture capital fund like Secure Capital. He is also investing in the fund, and he is also separately investing in like one of the company or one of the startup. There's a startup called Zomato. He can invest as an investor, and his private equity is also investing.
Okay, understood.
That's it.
Yeah.
Direct investment, here the investor invests directly into a company or project, such as that if I don't even explain, you understand, right? Instead of putting the money in pool, he is going to directly invest. That's it. For that, he has to be a very, very big, he has to be a very rich individual, correct?
Yes, sir.
Yeah. So in co-investing, what is happening is he is an investor in a company and his fund is also invested in the company.
Yes, sir. Understood.
Ah, so that's what it is. I am sending a chart to you. You can see that chart once.
Yes.
Just check that pic.
Yes, sir.
You understood that?
Yes, yes, understood.
Yeah. So you can see that in fund investing, investor is first putting his money into alternative investment fund. That is doing investments in investment A and investment B. Then in co-investing,
Yes,
he is
sir.
investing in investing. He is putting his money as an investor in the fund and also investing in the investment C. So fund is investing and he is investing. Direct investing, he is only investing. That's it. Okay.
Yes, sir.
Yeah. Describe investment ownership and compensation structures commonly used in alternative investments. Alternative investments are often structured as limited partnerships. In that, there's a general partner and limited partners. General partner is the manager, okay, who manages the fund, and limited partners are the investors. Fine. So, who will be in maximum number? The limited partners when compared to general partners, right? And the limited partners typically have no say. That means the fund is managed by the general partner. Limited partners have nothing to do with his strategies. Okay. And they are not going to have any saying on how the fund should be managed, and no liability beyond their investment in the partnership. That means their liability is limited to the extent of investment what they have done. Correct.
Yes.
The general partner takes on the liabilities of the partnership, including the repayment of any partnership debt. So he has to manage and he has to take care of any kind of debt. Because the limited partners, the liability is limited. Partnerships typically set a maximum number of limited partners that may participate. So they may kind of set a maximum number of people who can participate in that fund. Limited partners commit to an investment amount, and in some cases, they only contribute a portion of that initially, providing the remaining funds over time as required by the general partner. That means they will give some amount and they'll enter, and then later on they will be fulfilling that the entire amount what they have committed, right? And if they want, they can give full amount or they can give it in phase wise. General partnerships are less regulated than publicly traded companies, and limited partnership shares are typically only available to accredited investors, those with sufficient wealth to bear significant risk and enough investment sophistication to understand the risk. The rules and operational details that govern a partnership are contained in limited partnership agreement. How they have to, like, what are the rights of partners and all, it's completely mentioned. Special terms that apply to one limited partner but no to others can be stated in side letters. That means some people, some of them will be big time investors investing a very big amount. They may get some special privilege that will be written in side letters. For example, LP might negotiate an excusal right to withhold a capital contribution that GP would otherwise require. So they can withhold also, correct? Correct? Because
Yes.
that kind of power they may have. Some limited partners may require that special terms offered to other LPs also offered to them. This is known as most favored nation clause in a side letter. To us also, if you are giving to them. Just a second, just a second.